Well, it's time for our weekly Market Prospects interview. This week, we are again pleased to have Dr. Joseph Glauber, Chief Economist with the U.S. Department of Agriculture, as our guest. He's giving us the U.S. perspective on the grain and oilseeds markets. Dr. Glauber, welcome to Farmgate.
Thanks very much.
Off the top then, please review the markets for wheat, feed grains, and soybeans, and what you predict will happen in the current crop year and into the new one.
Yeah, well, let me start with wheat. I think the wheat, on the wheat side, we've seen, 3 of the last 4 years have been record crops, really dating back to that really short supply situation we saw back in 2007, 2008. That was followed by, again, record high prices, and what we saw was a lot of area being planted to wheat, with production for the most part, we're seeing record levels. The big exception being last year when we saw such problems in the Black Sea. But as a consequence, when you're looking at year-over-year record crops, not surprising, we've been rebuilding stocks. Our wheat stock levels are at the highest levels since really 2001, 2002. Because of that, after those record prices that we saw with the poor condition of the Black Sea crop, we've really seen prices come down a lot since that time, because essentially world markets responding, a lot of wheat ending up on world markets. And as a consequence, prices have fallen. I know U.S. wheat exports have been off a little bit because of that. I think that as we're looking now at fall planted wheat and looking forward in the spring planted wheat, I think that it wouldn't surprise me to see another record year, again, assuming normal weather and that no really big problems out there. With the coarse grain or the feed grain market there, and I'll speak primarily of corn since it's the predominant feed grain here in the U.S., but their stocks have remained tight. Unlike wheat, even though we've seen world record feed grain production, record corn production over the last year, the use has been so strong, primarily due to biofuel production in the U.S., but also the export market's been strong as well, and as a consequence, we're looking at some pretty low stock levels. Particularly when you express that as percent of use, for the U.S., it's probably one of the lowest levels since the mid-90s, and even worldwide quite low. And so we've seen a lot of strength in that market. I think most people are anticipating more corn to be planted this year as a result, to see some of that, with some chance of beginning to rebuild stocks in the corn market. The other thing is the ethanol market in the U.S., at least the corn use for ethanol has begun to flatten. We've about saturated the U.S. market for ethanol, just due to the constraints on how much ethanol can be put into the overall transportation supply. And as a consequence, corn use for ethanol is we're now projecting that to be about the same levels it was last year for corn, which again I think should moderate corn prices a bit, again, assuming no real change in weather or problems, at planting time or later in the summer. For soybeans, I think that generally the Latin American crop has looked quite good, but over the last several weeks we've seen some dryness down there, so we have taken off the production numbers there a little bit. If that's the case, if those crops do turn out to be a little lower than we had anticipated before, we could see some potential gains for other countries, such as the U.S. in terms of on the export side. Stocks in the oilseed complex generally have been fairly low, but again, not nearly the sort of issues that we've seen for corn. That said, I think that the attractiveness of the corn crop, corn prices will probably result in slightly less soybeans being planted this year, maybe more down in the 74 million acre range, and compared to where we were seeing, and where it was last year, probably down about 1 million acres. And for corn, we could see corn up in the 94 million acre range. I think, again, up about a billion, 2 billion from, million acres from last year.
So what's the acreage and condition of the U.S. winter wheat crop, and what is its potential yield?
Yeah, well, the winter wheat crop, we're up a few million, or a little over 1 million acres from last year. We're close to 42 million acres planted. As most of you know, the Southern Plains saw some really serious drought this past year, and about this time last year, the conditions really started worsening, and we saw a lot of abandonment, more from the spring planted crops, but the winter wheat crop was in very poor shape pretty much from the get-go last year. And unfortunately, we just haven't seen that much moisture return to the region, so it still looks quite dry. I think, looking at the real issue will be is in in the next month if conditions are worse than they were last year or slightly improved. We have seen some rain, so hopefully that will help things with the winter wheat crop. But generally, at least at this stage, I think the condition that's in poor, very poor, is slightly elevated from last year. Again, the real critical thing, however, will be what happens over the next 4 or 5 weeks, and there, hopefully, at that point, we won't be that we'll see some recovery as the wheat starts to emerge again in late winter, early spring.
At what stage of development is the new U.S. Farm Bill, and what will be its focus this time around?
Well, that's a great question. The current Farm Bill that was passed in 2008 essentially expires at the end of the year. It really is covering the crops that are currently being planted, and so there's need for Congress to pass legislation over this next year. At the latest, it could slip into the first part of 2013, but again, I think a lot of people in Congress would like to have that done this year. The big focus, of course, is the budget, and as you may know, we had an exercise over last fall where Congress was trying to put together a budget reduction package that would save, $1.2 trillion over 10 years. Part of that meant some pretty significant cuts for U.S. farm programs. The real issue as we move forward will be, what will be the budget targets for agriculture over the next 5 years. That effort that went on last fall failed. They were unable to, the so-called super committee was unable to come forward with a set of proposals for Congress to vote on. So as a result, we'll be facing a new budget debate, and one in which we'll have to debate a new farm bill. So last fall, when people were talking about cutting farm programs by $23 billion over the next 10 years, the real issue will be, as we're moving forward, whether or not that number is still valid, or whether or not, as some fear, that Congress could ask for larger cuts out of agriculture over the next 10 years. But I think one way or the other, farmers are going to be looking at some changes. One of the things that's been talked about is elimination of the direct payments. These have been payments that have been with a part of U.S. farm programs since the mid-90s. There's some $50 billion in payments that go out, over a 10-year period, about $5 billion per year. Congress is talking about cutting those and wrapping some of those monies into more safety net programs. But again, we're a long way from seeing a farm bill passed. I suspect, I think most people expect at the earliest by the end of the year, but maybe drifting into early part of 2013.
Well, once again, Dr. Glauber, valuable insights. Thanks for your time.
Thanks very much.
Farmgate takes a 2-minute break again. Please stay with us.